Hi guys, welcome back to another episode of Good Old Days. In today's episode, we'll be talking about how you guys can start investing as a uni student and build your wealth.
So before you move into investing, there are three criteria that you should meet. First is you should pay off any high interest debts. Second, you should have a good insurance coverage and enough funds in your account to fund the premiums for these coverages. And the last one is you should save aside a good sum for a rainy day. So a good benchmark for that would be your 6-month income. This is quite important before you move on to investments, and it's important to have knowledge of savings and basic budgeting. And we have actually done a video on this, so if you haven't watched it, do take a look at it before you move forward with this video.
So before we move on, I'd like to just say that me and Lavnit here are not financial advisors, and any things that we share here are subject to ourselves, and please do your own personal research and due diligence before jumping on any of these bandwagon. So Lavnit, maybe you can share with us a bit more about Singapore savings bonds as well as the saving plans.
So I think for students, the easiest to get a dip into investments is through regular savings plans and Singapore savings bond. So it's a very almost a risk-free investment, and I will go through the process of getting into it. So as students, I mean, most of us have accounts with the basic local banks like DBS, POSB, OCBC. So you would have to go through these platforms, through the online banking, to actually invest into savings bonds and regular savings plan. So for savings bond, the minimum amount is about 500. You would need to go through your online banking account and select the bond for the month. So bonds, I think in Singapore, release on average of every month or every 6 months, and the length of a bond is it ranges from 10 years to 20 years to 30 years. So a good part about a bond is you get a coupon rate. So each month or each year you will get a coupon which will keep with the inflations and just a rate of return. So you would just have to go into your bank account to do this. The second easiest way to just beat the inflation for a student is through a regular savings plan. So this is also part of your bank account, DBS, POSB. The fees are actually quite low, it's only 1%. And a good part about regular savings plan is helps students to be disciplined. So automatically every month, the bank account will just deduct your desired amount and put it into a regular savings plan, which could range from just index savings to the STI ETF. I would say the returns are quite good on average and are much better than just leave it in a bank account. So STI ETF for the past 2 years has been 8.6%. So the process is similar to a savings bond. You just go on a bank account, you click through the investment screen, a regular savings plan, how much you would like to invest each month. You can choose your preferred regular savings plan and what portfolio you want to invest into. So these are pretty easy, at least for students, because we are quite busy with studies and internships and we don't have enough time to focus on our portfolios.
So just to reiterate again, we start saving with bonds and saving plans just by using our mobile and internet banking apps and the website. Am I right?
Yep.
So it's really that easy to start investing. This is one of the safest ways of guaranteed returns at very, very low risk. A slightly higher risk and with much higher potential upside gain is buying into shares of companies, both local and global. So we all know that Singapore share market is actually very, very safe, and if you buy like blue chips, which are good companies, these gains can actually be substantial if you have a high capital. But with low capital, you might not be able to see much gain, and it might be tough to get into the market. So just a very, very brief way how to start into Singapore shares. You just need to go to your local bank and say that you want to open up an exchange, and you don't even need to be 21 years old. I opened up my exchange account when I was 18, and from there I started journeying into buying shares from the Singapore market. Another way we can buy shares, this time in the global market, is as a student, right, very, very simple, is to download apps such as like Moomoo or eToro. These are not sponsored, by the way, and we can deposit as little as like $200 and we can actually buy portions of shares. Let's just say like, you know, Amazon costs about slightly under $2,000. You can buy as little as like $100 to $200 off Amazon share, which is like 0.1 Amazon share, or you can like buy one Apple share, which is around $127. So using these kind of mobile platforms, you know, we can actually venture into the global market at very, very low cost. Yeah, so you know, before we end off the video today about shares and bonds, let's talk a little bit about, you know, something that interests both of us. Like, is the current hype with Elon Musk and everyone talking about this. And we're going to talk about a little bit about cryptocurrency. Yeah. So, as a student, how is it like investing in cryptocurrency?
Actually, wow, I have my bad days and my good days.
Yes.
Yeah, it's quite a scary. Honestly, it's quite a scary investment, but it can also be a quite rewarding investment.
Correct.
For cryptocurrency, there are I mean, the main hype is Bitcoin, but there's so many cryptocurrencies out there. And the minimum to buy just one of those coins can be just 5 cents, like Dogecoin.
Correct.
So at least to get started with this process, it's important to do your due diligence on the perks of each coin. But there are many platforms out there. A good example would be CoinHato, and like you said, we are not sponsored. The transaction fees are quite low, and it's very easy to sign up. You just need to scan your IC, your age, and just agree with the terms and conditions.
Yep. So you know, the upside about cryptocurrency is there's really unlimited potential to the upside. A simple $1,000 into a low cap coin such as like Dogecoin, right? The meme coin could gain you all the way up to $100,000 within 4 months. But on the flip side, if you had bought $1,000 worth of Dogecoin in April, within this last month you have seen that your value has actually dropped by more than half. So with very high upside, that also comes with a lot of risk. And cryptocurrency is just one of these examples that, you know, has potential high gain and high risk. So the risk to reward return is equivalent. Like, you know, we started with saving bonds and saving plans, which actually have low risk and provide low gain but still gain more than, you know, saving in the bank. Then we moved on to shares, where if you actually done due diligence and good research, the risk is actually quite low and the gain is still substantial. Whereas for crypto, you really need to put in a lot of effort into research and timing, you know, like timing the market dips, you know.
I mean, sometimes your research also is not good enough.
Right.
I mean, people like Elon Musk can influence the market quite a lot.
Correct. Yeah, so these are the few tips that, you know, to get started. All you need to do is sign up for certain apps on the App Store or Google Play Store, or log into your iBanking app or website, and you can get started on all this investing, I think, as students.
The scary part for me, I think, after I did all my research, was just making the first move. So don't be afraid, just make the first move, download the app, sign up, and just get started.
Correct. So before we end off this video, I'd like to just say something. Like, it's a quote that our friend actually told us. It's not about timing the market, it's about time in the market. And this is important because from research, you know, the people who hold the coins or hold the shares the longest are actually most of the time in the profits. And when I say long term, I don't mean like, you know, 6 months, 2 years. It's really long term is 10 years and above. So something you buy now, a good company that will not go bankrupt or face liquidation in the next 10 years, like Amazon or perhaps Apple, there's a very high chance, you know, that you actually see profits.
Compound interest is the 7th wonder of the world.
So yeah, if you found today's video of value, please subscribe to our channel, like our video, and comment any questions you may have in the comment section below. Thank you for watching.
Thanks. Bye-bye.